Hello, YouTube. We're going to continue the story from yesterday where we talked about the potential for a corrective wave. This pattern seems awfully easy. It's a topping pattern. We talked about it. I will come back and circle and talk more about it, but this is easy. And we want to know that we don't want to fight the Fed. Well, look, stocks are very, very red today. We got a huge whack in fear and greed. We went from 74 back down to 65. So Jerome Powell's got a scowl on there saying, hey, to Mr. Stock Market, I think you're a little bit too high. So what exactly did he say? And what's happening behind those blue eyes? Let's see exactly what's happening. The market wanted just a little bit more. And ironically, we actually got a bounce when Nikki Leaks actually spoke. And then the market just sold off. So if we look here to a short-term time frame like the 15-minute chart, let's just remove extended hours. Right here is where Nikki Leaks spoke. And then Jerome Powell's like, hey, actually, we've not done enough work yet. We haven't made enough progress. And he said more things like, specifically, he said that we're not declaring victory at this time. We have a ways to go. And then after that, we saw another comment, which took the market down. It was this question about rate cuts. And he said, I don't know about March. And we're going to give an update to that because there's a 64.5% chance, basically 65% chance, like the title of the video today says, that we're going to be pausing next month. But the question is, are pauses even all that bad? Remember, on the weekend, we said there's a big move coming. Powell versus the stock market. Time to act now. Well, I think we told you so because this is the fattest red bar we've had at least for a month. Oh my goodness, for a month. Yeah, it's been about a month going back to December 19th. So we got our support and resistance areas here. But what I really want to do is make sure that we understand there was going to be a corrective wave or sideways action coming at some point. We knew that greed is for selling, but we're still in greed. So what do? Well, Jerome Powell told us. So stay tuned. And then today, I'm going to tell you exactly what we need to know. We just need a little bit more of what? Exactly. Just a little bit more patience. So the stock market is a device for transferring money from the impatient to the patient. On the weekend, we talked about how we have to wait and see what happens into the close of January. There's going to be lots of noise, and we want to focus on levels. So you're like, oh my God, the market's like so deeply red today. And I'm like, well, are we over 480? Hey, if we're over 480, it's not that terrible. It's a matter of how good it is. Yeah, but 482 doesn't feel good, Justin. I know it doesn't feel good. If we look here to the weekly chart, I'll show you one thing that concerns me, but please keep this quote in mind because this is focused on the monthly time frame, but it also applies to the weekly time frame. So we're going to look at that in a second. But first, a word from our sponsor, Mr. Like. If you guys wouldn't mind, please considering smashing that thumbs up or subscribing to the channel. I would really, really appreciate that. You guys have been so good, and we're within 100 subscribers of getting to 20,000. So thank you so very much. It's truly rewarding to have a second channel, which is now doing really well. Thank you, thank you, thank you. If we now think about that patience quote from Warren Buffett, what do we have here on the weekly chart? Oh my goodness, it's nearly a bearish engulfing pattern, 482.78, 482.86. That's within 9 cents. So we nearly have a bearish engulfing candle. What does the quote from Warren Buffett say in my interpretation? Wait for the lower low. Be patient to wait for the lower low. Yes, it might feel scary. Yes, we're right on support, but we've not lost it. But something that has lost it is the NASDAQ. And we talked about that warning sign on the NASDAQ, right? Chips lead tech, tech lead SPY. Well, now we have a lower high, lower low, and we're currently below last week's low. So the selling really accelerated after that happened. And this is something I want to mention that I forgot to say a little bit earlier. On this morning's stream, stay tuned till the end if you want to see a link for that. I mentioned that we usually get a knee-jerk reaction on the headline. So at 2 o'clock, and again, I'm just going to show you the price action. There's not really much that came through in the news. So headline comes out, we go down. As soon as the presser or the press conference starts, we get our knee-jerk reaction higher. We make it within like 10 cents, 20 cents of getting back to our daily high of the day. Nikki Leaks asks the question. He tees up a softball for Jerome. And then Jerome offers up information about no cut coming in March. Market reprices and stocks go down to not just where we were before, but actually to a new low of the day. So very simply, that's what happened. We just got an overreaction to Jerome Powell's comment, and the market basically repriced. What repriced? The dollar went all the way back up. You can see that that big snapback right here. So pretty sizable gain, which would have hurt the market. And volatility spiked and then spiked again. Why? Jerome was asked questions like, hey, the 3-month rate on inflation is actually at 0.3%, which is below your target. He's like, I don't know. I still need more data. They haven't convinced me yet, sir. And that's what I think the market's a little bit concerned about. He wants more of the same data. So what exactly does that mean? We talked about it. So instead of focusing on the data, again, I encourage you to watch the weekend review. I want you to just know that on Friday, we get a really important number. We get non-farm payroll. This is expected to show fewer jobs added. We're expecting to get average hourly earnings go down and unemployment go up. That's exactly what Jerome wants. So we could be changing a story as early as Friday, and we're over 480, which is good. Let's keep in mind that. Let's go back here to our monthly levels and our notes. Again, lots of noise. We can talk about the noise. There's earnings. Just look at the charts. They're red, right? We looked at the heat map earlier. Yeah, it's pretty bloody. We talked about it. We gave the warning for Microsoft, Google, and for AMD. Well, now we've got Apple, Amazon tomorrow. So if we understand there's going to be lots of noise, we can jump into the noise. We can get confused with it. But hey, do we make money based on what we think? No, we make money based on orders, and we know that for next month we're looking for 490. I'm going to revise these numbers into tomorrow. But again, we're jumping down here to week today. We now made it through the number 3 most important catalyst for the week. Now we made it through number 2. That was the most important. Look, the market moved, right? Thought it would happen. It happened. Now we closed out the month of January. So now tomorrow we got 1, 2, 3 more really important data points. We're going to open up the month of February. We're going to get European CPI before the market even opens in the US. And then after the bell tomorrow, 3 more of the Super 6. Okay. And then non-farm payroll on Friday, which is the second most important data point of the week. Yeah. So what does it mean? I would really encourage you to focus on higher timeframes because look, the daily chart is pointing up. We have key levels right here, and I talked about those on the weekend. If you want to see it, just stay tuned. The video will be queued up at the end of the show. On the weekend, on the weekly chart, we're also what? We're pointing up over our pivot or previous all-time highs. Hey, that's a back test of support. We have to assume it's support as long as it holds. We can carve out a little sideways action here, or we can lose it, or we can go up. There's nothing bearish here, but again, we're right on that weekly higher low. I would really want to see that hold. And then finally here, if I go to my third board, which should be here for our monthly, give me 1 second. Let me just fix this. All right, here we go. 1 month. What do we have here? Man, we got another hollow candle. And remember, if we go back in time, we have this pattern here of 2 red candles. Here we got 3. Then we got 2 green bars. Here we got 3. So I was actually looking for a red candle into this month. And the reason why this one particularly matters is because what we talked about here, again, right on our note, we go back up to the top and we say here that if 466 is the Jan low, which the month is now closed, so we know it's held, then we ratchet up support, and now we need to hold that area into February. That's it. That's today's video. So if you want to watch more, I encourage you to watch the weekend deep dive now queued up here on the left-hand side. And if not, maybe you want to subscribe to the channel to come hang out tomorrow at 9 a.m. when we go through the stock market open. Thank you for tuning in. I'll see you tomorrow.